Hello and welcome, everyone. Today we're going to be doing another segment of our market movement intro series. Today we are going to be addressing significant levels and the auction as a whole. All right, so one of the first things that I kind of just want to talk about and cover here, no matter what time frame you're trading in, there are other time frames being traded every single day. So whether you're a day trader, scalper, swing trader, or a long-term investor, decisions that are being made every single day are based off of all of the time frames. There are going to be other day traders who are making trades in a given day. There are going to be other swing traders making trades in a given day. There's going to be investors making decisions about their portfolio in a given day. Now, all of these people making decisions, all of these different time frames making decisions, are going to affect the market price on various levels. And each of those levels are going to have a significant impact on the subsequent levels. Kind of think of it more like orders of magnitude. So, for instance, the investors and the long term traders, they're going to have more of an impact on the overall direction of value inside the market. Our more middle term or midterm traders, they're going to have a shorter outlook on where value is, and therefore their trades are going to be driving more of the price that we're going to be looking at for our near term. So when we say macro, when we say medium, when we say near term, there really isn't a concrete definition for how long those points of reference or those times will be. For you as an individual, you're going to have to use some subjectivity. You're going to have to play around with different time frames to kind of figure out what really represents the best information for the market or the security that you're trading in. So as an example, I'm going to take you through today my setup and how I break down the SPY so I can get an idea of what this market is doing in particular, because this is a market that I tend to day trade almost every single day. So when we look at our macro, I like to look at the quarter chart. Now, we've talked about this before. We've used this chart in other videos before. This is our 3-month or our 90-day daily. So on this chart, we can kind of see what's been happening to the market's price within a quarter worth of time. Quarter being, 3 months, right? So what can we kind of figure out from here? Well, one of the things that we need to look at first is what is the broader, more overall market doing? What information have we gained between the start of where this information begins and kind of where we're at now? Well, we can see that this is kind of starting right towards the end of January. And that's when we started to see a lot of things selling off, right? We were really starting to push down. There were fears of inflation. There were fears of a bear market on the horizon, lots of things going on. And then, of course, within all of this, we also then had Russia invading the Ukraine. A lot more pressure was put on the international markets, supply chain issues occurring. So we saw the market get kind of pushed and depressed even further. Now, as this kind of came to a head, we can see that something seemed to have kind of fundamentally changed right about here. As the market's coming down, as it's pushing down, we've encountered this spot where the activity just couldn't push any further. Every time our sellers brought value or tried to push value down, this is the area in which buyers started to react. And it was right here on 314 where the entire tone changed. Now, we didn't know that until we got to about 317 and 318. That's when we started to really see, oh, okay, everything's starting to change. But when we're looking at this from the quarter scale, we can see very clearly that there was a pattern, there was a behavior that the market, the auction, was taking on the more broad scale. And then we can kind of see where everything shifted and changed and now we've got this new type of market developing. Now from here, we had this big run-up that found an unfair high, and once we kind of found that high, that's where our sellers started to step back in and push us back down, bringing value around into this area. But now we're actually starting to see something new develop. We're seeing some consolidation where buyers and sellers have been having a nice argument with each other right around where our 200 moving average is, which also happens to be below our 20 and our 50 moving averages. Now, there's one other really cool thing that's going on here that I want to show you. When we're trying to pinpoint significant levels, and this goes for every time frame, there are just a few things that I really like to focus on, and I like to keep it simple in my analysis. Too much analysis, you can end up finding yourself in analysis paralysis, to coin a fun phrase. So what we're going to do is we're first going to add in a Fibonacci retracement, so we can get a look at what the Fibonacci is telling us from where the market fundamentally shifted and changed. So that's why I've picked this point here, because we can see from the broader scale that this is where something changed, and then this was the aftermath of that change. This was the end of the move. Now, from this move to this move, we can see that a 50% retracement hanging out right around our 200, and we can also see that the last several days of price activity have been fighting to stay above and push below a 50% retracement point. Now, the other line that we have on here is our 618. This, in Fibonacci terms, this is the golden ratio, if you will. The 618 is found everywhere in nature, numbers, science, math, music, plant life, cellular life in general. And there tends to be this almost like universal mathematical equation attached to it. A little bit spooky, but why I tend to find that to be important is the other thing we need to remember is that everyone else is also looking for these significant importance levels. If all of a sudden our price activity starts to push us below this golden ratio number, that would significantly begin to increase our odds of finding ourselves maybe even doing a full retracement back to this beginning part, just to test to see if there's any more value that we need to be looking at down there. Now, beyond that, I only like to do my Fibonacci numbers on the overall broad market. You can absolutely do them on other ones, but again, we're trying to keep this simple. We only want a few points of reference that we need to be aware of as the market activity is moving around, so we don't have to keep too much information on our charts, and we don't have to be questioning ourselves on what all this different information is doing. So from here, we've got our quarter chart on our daily. We're going to use a study called the volume profile study. Now, I keep that turned off when I'm not using it, and you'll see why, because it takes up a ton of real estate. Now, when you're utilizing this study, what I like to use for settings is I make sure that I'm set to the chart. So that way, whatever particular time frame I'm looking at, whatever chart I'm looking at, I'm going to get the overall volume profile for that information. So what this tells us right here is that the last 3 months, this is where our volume profile is hanging out. So from our volume profile, we can derive where the high point of value is, the low point of value, and we can also see where the highest concentration of volume resides with trading. And this is called our point of control. So as far as marking important information on our chart, we're going to go ahead and we're going to put a level at our value high, our value low, and right at our point of control. Now, for the sake of saving time, I'm not going to go through and add all the fun little tags or color codes that I would to this normally. I'm going to show you what my actual chart looks like when we're done going through this exercise. So we've got our value high, our point of control, and our value low marked out. Now from here, we're going to go ahead and we're going to turn our volume profile study off, so that way we've got just the information that we were looking at before. You know what? For the sake of this, I am going to do this real quick because it will make it easier when we're looking at things. There we go. Awesome. Okay, so moving on from here, this is our macro look. We're going to be looking at the medium term next. Now, similar to your macro approach to whatever security you're analyzing, your medium is also going to be subjective. You have to determine what is a good middle ground. Where would you situate yourself if you were trying to swing trade within this security in this market? Something that you can do, and this is going to take a little bit of practice, is you can try to find areas in which the market gave you some pretty significant information, or where something may have changed, where there may be the end of a distribution or the beginning of a distribution, the beginning of a bracket or the end of a bracket. So for our medium term, I'm going to use this candle right here as our starting point. Now, the reason that I chose this candle as our starting point, because this was the point after the market had made its breakout above our 200, above our moving averages, in which we had our first true day to test where this move was going. And from this test, we then tried to make another breakout, and we entered into a short bracket before we then entered into another breakout that ended in our unfair high. So we're going to count our days. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19. So that's 19 days for our medium term. Now, so we can get just a look at that, we're going to go to our time frames. We're going to go over to custom. We're going to click our button here up to today. We're going to set this to 19 days. So we're going to get a 19-day daily chart. And look at that. It starts with that candle that we determined was going to be our beginning point. Now we're going to go ahead, turn our volume profile study on again. And now we get the volume profile for just these last 19 days. So within this, we can now see where the high point of value for the last 19 days has been, the low point of value for the last 19 days, and the point of control for the last 19 days. I'm going to mark those out too. Oh, that's our 50% fib. And last but not least, there we go. All right. Now, keep bearing with me, because when we finish this exercise, we are going to discuss and explain, and I'm going to use some visuals to show you just why knowing where these information points can be very beneficial to you in your trading. So we've got all that set. Yep. Turn that off again so we can get our chart back. Good. Awesome. Okay, so we've done our macro look. We've done our medium look. Now we want to look at what's going on more in the near term. Again, this is going to be very subjective to what you're looking at as a trader. You can pick if there's a bracket currently going on, the start of the bracket. If a distribution has just ended, you can start there. If a distribution has just begun, you can start there. But the idea is you're kind of trying to look at a much shorter time frame. So for our macro look, we've got the 90 days. For our medium look, somewhere between 10 and 30 days is probably what we're going to be looking at. And for our near term, we're looking at something 3 to 5 days. So it'll kind of represent what's going on within a week's worth of trading. Now, fortunately, we've got a pretty easy example to see right here. So within our middle term, we can see where we found the unfair high. We came down and we kind of tested where this initial bracket started after the first distribution ended. And then we dropped below our actual bracket that was forming. So these 4 days right here, this is some pretty solid market-generated information to use for our near-term look. So that's 1, 2, 3, 4. Again, we're going to use our custom time frame. 4 days. Boom. And look at that. Once again, we're going to go ahead, pop up our volume profile study. And now we have the value, high, low, and point of control for the last 4 trading days. I'm going to call this our NT. There we go. There we go. Boom. All right. Now we have our daily chart marked up with our important sets of information. Now I'll show you what uh-oh. Why? Well, that's unfortunate. My broker seems to have disconnected. Well, that kind of... What is going on? Oh, all right. Looks like my internet may have crapped out for a second there. Hold, please. Let's see if our video recording is still going on. Okay. We are apparently still recording our screen, so that's good. We're back in the Discord chat, and we have our chart back. Okay, cool. That was kind of weird. But anyways, all right, moving on. So, real quick for you guys who were chilling in the chat, did I kind of get cut off mid sentence? Did you guys hear me kind of wrap up before I tried to move over?
I think you cut off when you were still looking at the 4-day period.
Okay. Well, we'll just kind of recap that then. So what we were looking at with the 4-day, we set up our near-term point of control, our value high, and our value low. So why are these particular levels important? Well, we talked about the Fibonacci and why those particular retracements can be important to traders who are on the much longer time frame. But now, when we're looking at the near term and we're trying to figure out how our midterm and our macro term traders are going to react, well, if we open up Monday and the trade or the auction is struggling to get price above this point of control, this high volume trading node, that can be a very early warning sign to us that value is starting to move even further down. And if value is moving down, that's what our middle term and that's what our macro term traders are identifying and looking at. Because you got to remember, the people who are trading in the time frame of a quarter, they're not looking at what the value is on any given particular day. They're trying to assess where value is going to be moving to by the end of a quarter. Or they're trying to, place their bets to be on the right side of movement and where value is shifting and going to. So, where is it in here? No. Dang it, I thought I had it open. Apparently, I did not. What in the world is going on? Screens are a little messed up. Okay. There we go. Fantastic. So I saved a picture, and the reason I saved this picture a few days ago earlier in the trading session is because every day I do reassess and reevaluate my lines, and I will move them around kind of based on what's going on. So this was last week. This would have been our Tuesday, Monday, Friday, Thursday, Wednesday, and eventually Tuesday. So this doesn't account for our Thursday trading session, which was the last trading session of this week because we had the long weekend. So what I want to show you is how everything was developing and what we were encountering based on our reference points and how they made me, or how they helped me make trading decisions throughout the week. So our first big one was when we were starting to make that first break below where we had kind of established our value point. And this would be our 90-day. Hold on, I want to make sure I'm actually looking at this correctly. So this was our Thursday, Wednesday, Tuesday, Monday. Okay, so that's when we dropped in. Tuesday, Monday. There we go. All right. Yeah, you can tell I'm super organized, right? So here's our Tuesday, looking at this day right here. Here's our Monday, looking at this day right here. And we come back to our wider points, Friday, Thursday, Wednesday, and then this was where we dropped through. Okay. So seeing where we dropped through, breaking through our 90-day value high, when the market came down and it was attempting to make trades back up through, but could not break the previous highs of the day, this was the failed rotation. This was where value was no longer being seen above where our 90-day, our quarter, had established value. No longer were traders viewing, in our longer time frame, were they viewing value above where the 90 days said value should be. So we returned back down and we decided to go do a little bit of testing. Where we ended up finishing, or where we ended the day on when we broke back through, was our bracket point of control. Now this is referenced a little bit differently on my chart here, but this is the middle term point of control that we were talking about, which you'll be able to see our medium POC right here, right? That's where we ended up breaking back through. So now we're moving on to this day right here. So looking at our Wednesday, we can see that the overnight session brought us down nice and low, and we started to balance just on the underside of our 90-day point of control. This wasn't enough of a move for people to start to think that value had moved very far away from where we had previously been. So, because there was no interest in selling lower at this present time, we had that rotation back up through, some pretty violent reactions. This was one of our Fed days. Let's say this was the day after Brainerd had made her comment. Sorry, pardon me. But anyways, kind of watching what's going on here with our extended monkey bars, we can see that there was an attempted push back up. We could not quite make it to our point of control, and we then eventually found ourselves consolidating right around that 90-day point of control. Again, in the larger time frame, this is where the most volume has occurred. Over the last 90 days, the most trading volume has occurred right along this line, and that is why it is super significant. So we get over into our Thursday, we open up right around that 90-day point of control. Sellers try to take control very early on and push us down. They weren't able to generate any interest immediately off the open. So at that point, we had a rotation above the 90-day point of control, buyers looking to see if there was interest, and again, trying to push us back up into these levels that had previously established value, but they couldn't generate interest either. So we rotated back around the 90-day point of control, balancing along this high volume line. and we looked for another point. Now, one thing that we can notice here, on 321, this was a point of control. This was a very highly traded volume node. On Wednesday and on Thursday, the market came down to the exact same price and reversed. This tells us that there were eager buyers still hanging out around this level. Sellers couldn't generate any force beyond that point, and that forced us to rotate once again back above our 90-day point of control. Couldn't generate, and all the way up to where we actually then retested the middle term point of control. We saw some consolidation through the overnight session under it, a few tests. Market opened up well below it. Sellers tried to generate that momentum. Here we go, 90-day point of control, that high volume node making another play within the day. Sellers couldn't push beyond it, so we rotate back up to do some testing. We test the bracket point of control. This again is our middle term. Can't generate any more auction above it. And here we go. Back down we rotate once again, looking at that 90-day point of control. But something interesting happened, because we can see over here during the overnight session, between where the market closed and where the market opened, something had changed. Something in the sentiment. We had this drop through that's now put us back below our 90-day point of control, and right out of the gate, buyers could not generate any kind of force back towards the point of control. Well, at this point, if this high volume node is no longer something people are interested in buying at, we've got to go lower. We have to go lower to find a price people are going to buy for. We drop below this other high volume node that had acted as support before, and we started to find some consolidation. That still wasn't enough. Had a drop. Another crazy overnight session in which this was deemed, apparently, to be an unfair low. We shot up. We had some balancing around that same 321 high volume node point of control. We made one last attempted test at our 90-day point of control, failed, rotated, and found ourselves deep down again. So that was where we ended on Tuesday, Thursday, Wednesday, Tuesday, right? So here's our Tuesday action. We had that final sell-off once again. Well, we can see from Wednesday and Thursday, it's continuing to find that balance point. It's continuing to battle it out on these very high volume nodes, these very high points of control. So one of the things that we can take from this, besides the trades that we would have been making throughout the week, recognizing that if price could not get above or if it could not stay below these volume areas, I lost my train of thought for a second there. Oh, before I get to that, okay. So why high volume areas are important. These are spots at which buyers and sellers, the most activity is happening. Buyers are agreeing on a price, sellers are agreeing on a price. These are the areas that we tend to see balance happen. And if we don't see balance happen, these are the areas in which the market tends to make its reversals, or it tends to start new distributions at. And that's something that repeats itself quite frequently through all of the different time frames. So by having these reference points on our chart, let's say we're in the day trade mentality and we're trying to make trades. We're looking at our Friday morning open. We see a very violent sell-off, and we watch selling activity get shut off at this 90-day point of control. Well, we're not balancing on it. We're not rotating around it. So we could probably put on a long position here and recognize that if we did rotate through that 90-day point of control, we would want to get out of our long position because there's no longer a play to what we're trying to do there. But if it doesn't rotate through, if the selling is very weak at this 90-day point of control, we can set a long position and be pretty well positioned for the rest of the day. Obviously, this is hindsight trading. We have all of the information in front of us, so clearly we can't be wrong. I mean, I can tell you that, yeah, obviously this was the best place to take a long. But without having the rest of the information there, watching this sell down make this position here, that is a good spot for a long. It has a very low risk and a very high potential for reward. And that's what we're trying to do at the end of the day, right? We're trying to pick our points of entry within the market based on the information it's giving us, where we can assess how much risk we have to put on the table and how much potential reward that we can get. Myself, I like to take the very low risk plays, high reward plays. I like to position myself so I know almost immediately if I should not be in my position. Um, I believe I did actually take a long position, but I think it was somewhere after we had begun our push up. But that's neither here nor there. So that's why things like that can be pretty important for us. So where does this take us as we're going into our market open for this following week? We have this balance area. We know where the value low is. We know where the value high is. We know where the point of control is. Based on where our market activity opens, if we start to get market activity that's balancing and moving back and forth across our near-term point of control, that's going to tell us things are very choppy. And it's also going to tell us that it's probably market conditions that we don't want to get very deep into. Those are market conditions in which we want to take a very risk-off approach. We want to make sure that if we're day trading, we're more focused on scalping. Days that balance along a high volume area are going to be very chaotic. But on the flip side, let's say we open up above this point of control and we have some selling activity that brings us down to it, but we watch the selling activity dry up and shut off at that point of control. Well, that's going to give us a good spot to start a long position with our target goal being our value high. Vice versa, if we start under our point of control, that's going to give us a target for our value low. Now, beyond that, if market activity starts to break away from that area, well, now we've got something that's starting to test this bracket. If we break above our value high, we're going to be testing whether or not we're going to break away from this bracket. Well, our first reference point beyond that is our 90-day point of control. So if the test moves up to the 90-day point of control, buyers start to dry up and disappear, we can probably ride a short at minimum back down to our value high. It may not be a failed test at that point, but it will give us a good entry location to capitalize on people who are trying to fade a high volume node, a point at which we've already seen a lot of market activity get repelled, right? We saw here from this candle, market activity got pushed up past it. We saw from these candles, market activity had a heck of a time breaking through that point of control. And now that it finally has broken through, it's going to take a lot of activity. It's going to take a lot of force for the market to push itself back through that point of control. So then that gives us another piece of information. If all of a sudden the market starts trading through this high volume node and buyers just take the wheel, well, we've probably got a distribution beginning. And we can just get in a long position and ride that train. Our next logical target beyond that, we've got our medium-term point of control, another high volume node that in theory should either shut off, repel, or balance out trading. That's just our upper point. So the next thing that we can potentially look at, well, let's go back to our Fibonacci's for a second. We can see that market activity has already started to hit that 50% retracement point. It's been having a heck of a time pushing it down. The current low point of the value in this bracket is right along that 50 point. It's a little bit above it, so that tells us that value hasn't quite migrated beyond that point. But if it does, if we do break away from our value low, our next logical point is that 61.8. We can see here that in our move up, that 61.8 acted as a springboard, a support point for when we were continuing on in our distribution. So if market activity comes down to here, it stands to reason that it will either find that it wants to create a high volume node there, because look back here, we can see that there was a lot of volume trading around that 618. There was a lot of volume trading around that 618. I mean, we can almost draw a straight line all the way across the chart, and we can see just how significant that golden ratio is from a math standpoint. So if activity pushes through that 618, if there isn't volume to be had here, if there isn't an agreement between sellers and buyers, well, then we've got a pretty good argument that we're going to be testing the 90-day value low. We tested the 90-day value high. We found an unfair high. And now we're coming back home. So that's where we're going to wrap up for this today. I don't want to take up too much time. Some of my videos have been going on and on and on, and I really want to try shortening those up. So what we're going to do is I'm going to close our video stream for now, but for those of you who are hanging out in our Discord, we're going to do a little bit of a live Q&A for anyone who is interested. Of course, if you are watching this video on YouTube at a later time and you found this information useful or interesting and you'd like to learn more, please join our Discord. It's free to be a member. Hop on in, chat with us, pick our brains. Feel free to trade along with us. But yeah, thanks for watching today, guys, and I hope this helps you be a better trader in the future. Take care.